So I really want to ask you like the harder questions now in our
Okay.
part two.
Mhm.
So with the current economic situation with COVID-19 and the market at all-time highs, what is your feel about all of this right now? You don't have to give a direction, but what is your feel? If you want to be brave, give your direction also.
Like, I'm kind of just like, there's going to be another bottom. So, I mean, we've been talking about a double bottom for a while. And so we kind of hit a bottom in March, but we'll call, for all intents and purposes, we'll call March a bottom. And then it just kind of continued to go up. And I'm like, no, 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 the fundamentals aren't here, guys. And we really haven't felt COVID. And I was having the conversation with a friend of mine last week, this week, they all been together at this point because it's COVID. And I was saying, listen, our last crisis was economic. And so once we got rid of the stimulus, the economic problem, we can kind of sort through the rubble and move forward. But we have a health crisis that we still don't have an answer for. And until we can have an answer for this health crisis, we're still going to continue to be in flux. And again, we've been able to flatten the curve in some places, and then other places, it's kind of like all heck is still breaking loose. So those are my concerns. So that being said, I think the market, when everybody kind of comes back to reality, I think we're going to have another leveling event. But I just don't know when. I don't know what the catalyst is going to be for that. Um, I just think, and then also there's Peter Lynch in his book One Up on Wall Street, one of my favorite books. He kind of says, like, early on in the book, he's like, listen, once my taxi cab driver starts giving me stock tips, I know that we're in for a drop. And I'm kind of like, you're right there, Peter. And then somebody else like randomly was telling me, like, yeah, you really need to get on this thing. And I'm just looking at them like, huh, you don't say. So that's kind of the way I feel now. I'm like, I'm just waiting for the bottom to fall out. And so, I haven't really been doing a lot of purchasing. I did purchase some Apple early on, and I purchased some Peloton. I actually had a stop loss execute on Netflix 2 days ago, 3 days ago, one of those days. So again, and I mean, I purchased Netflix at $7 a share. So I'm happy with it, Yeah, I traditionally buy and hold, and I've had Netflix, I want to say since 2015, 14, one of those years. But so I was okay with letting it go. And it's not that I don't think it's a good company, but I just don't think it's, the numbers support, the valuation, or the market cap. So I, the bottom's going to fall out. When, I don't know. What the catalyst is going to be, still have no idea. I mean, we couldn't have predicted COVID. We all thought it was going to be an economic fallout. I don't think we were calling it like similar to 2008 because the environment's not the same, but we definitely were like, oh, it's going to be economic. And then like, here comes this health crisis out of nowhere. And it's like, woo, and it's like, whoosh. I'm like, and we're all just sitting there like, Macaulay Culkin, like Home Alone, like, oh my gosh. So that's kind of my thoughts. I don't really have a direction. Like, yeah, I have a direction. It's going to go down, but do I have a idea or a duration of when the correction is going to happen? Absolutely not. And I've been trying to use kind of some metrics that I've known to be true, but they're still not. I can't make heads or tails of any of this. So, I have been doing options. I've been doing a lot of options. And even my option plays are gotten weird. Cause I'm kind of like, hmm. So I think it was a couple of So I made a lot of money on MGM. So MGM was been a pretty good kind of one. I'm like, yeah, like Vegas is closed. MGM's gonna go down. I'm doing good. Vegas is opening. I'm going to do a call, kind of really simple kind of stuff. But otherwise, there was something else. I got burned in the middle of an option play, and I just offhand can't remember. But I was so irritated because by all logic, like all financial logic, it should have been a fine play, and it just went south. And I was like, how did we get here? And one of my other friends we were talking, and they were like, yeah, I don't even know. And it wasn't the same. We weren't in the same position, but kind of the same logic. Like, 1 + 1 = 2, but this is not it. So that's been, so I actually only have like one option right now. And it's just, done terrible.
Mm.
And it expires on Friday. And I'm just kind of like, do I get out? I'm like, I don't know.
I'll tell you the option that made me very humble.
Mm-hmm.
I've been humbled a few times, but this one really made me humble. Uh, Boeing. I for years was like, Boeing's way overvalued. This is
Mm-hmm.
ridiculous. I used to be an aerospace manager, so I feel like I know
Ooh,
a little bit
right.
about it.
Mm-hmm.
So I kept on buying puts, and they'd always expire. I'd always lose money. And finally, like, I was like, oh wow, it's actually dropping, and I sold the put. I was like, okay, good, I finally made money.
Mm-hmm.
Well, it kept on dropping, and it kept on dropping, and it went to $100. So I was wrong on the way up, and I was
Mm-hmm.
wrong on the way down. So I can't time options at all.
But I think I think that's exactly my point. Like, and I was telling people, because I was an oil and gas attorney before I, like, kind of my little quick stint. So I was kind of like, I think I definitely was I in Chesapeake. I couldn't have been in Chesapeake because Chesapeake was almost delisted. And then they did the reverse split. And I don't, it was one of them. It was kind of like, yeah, this shouldn't happen based on all the things I knew about oil and gas. And then all of a sudden it like kind of went off the out of the way. And I'm like, I'm in the twilight zone. I was like, I'm straight in the twilight zone. I was like, you know what? Let me just take my ball and go home. I've made my money on, I think, MGM, Clorox, and there was another, what else? I'm like trying to look at my app real quick. I'm trying to say, like, there was a couple that I've done really well on because they made sense. And then the other ones was like, but I've taken my ball. For the most part, I've taken my ball and gone home. And I should have sold this option that I had on Facebook yesterday. So I'm kind of like, I was actually trying to do a put on, I want to say it was Carnival. And it was a great position, and the circuit breaker went off. I was so frustrated. I was like, oh, man. So that's kind of, I've had a couple of all mans. I told you I've gotten humbled. This market has humbled me, and I've never really been a big options person. Like, that wasn't kind of my strategy. But like I said, I haven't been buying and hold. Like, I haven't seen any opportunities because I felt like a lot of these companies were overvalued. I was like, this just doesn't make any sense. I'm like, you're not making any money, and your stock keeps going up. No.
So that comes to another question, because I completely agree with you. Everything you said about this market being overvalued, all of it, I 100% agree with you. But what I don't know, and I'm curious what you think, is why? Why is the market going up right now? Why?
So, I mean, we were talking about the casual investor. So we were talking about the casual investor and how, but it just can't all be the casual investor. So that was the other side of it. They're like, yeah, it's the casual investor. They're just like, which to a certain extent, some of it is. Like, I think it was a couple of weeks ago when Hertz went bankrupt. Remember that?
Oh yeah.
Hertz went bankrupt, and then Hertz stock went up. And I'm kind of like, no, 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 no. And then they went to the bankruptcy court to petition. I don't know if you caught this part. They went to the bankruptcy court to petition the issuance of new stock to actually kind of help restructure its debt. Did you catch that?
I didn't catch that part, no.
And I was like, no, it's worthless. What do you mean? And I think the bankruptcy court, if I remember the story correctly, because I was reading it and I was kind of going to do a blog post on it, but I was so flustered with the whole thing that I was like, I can't even touch this. But I'm pretty sure the court was like, okay. And I think they ended up eventually not doing it. But it wasn't because they weren't able to do so. I think they were just like, this is really probably just a bad idea. Like, And so I think some of it is the casual investor. Like, people just did not understand. They're like, buy low, sell high. And I'm like, yes, but we're looking at good companies with a good value. We're not looking for bad companies with, like, I should do, okay, a good price. We're not looking for bad companies with a good price, because the price is actually reflective of the value of the market, or, it's really reflective of what its true value is. And Hertz should have been zero, So it was just like, I mean, I've been doing like this the whole time. My whole time I've been doing like this. I'm like, I'm looking, I'm like, can I make, like, what positions can I come out with? And my fiance, I set him up in an ACB play. He's like, I tripled my money listening to you. And I was like, yes. But that was because I was playing a lot of different things going on, and it just all worked out at the same time. But he was like super excited. And I'm just like, no, don't expect this to happen all the time.
Yeah.
That's kind of how things are going.
I will say, the whole Hertz story, I can just envision how people talked about that, because I've heard it before. They'll talk and say, wow, man, Hertz is really low. I should just take a nibble, That's the extent of the conversation sometimes is let's just give it a shot. Let's roll the dice. And sometimes it's probably not the best
No,
idea.
they were over, like, their debt was a real problem. That was the whole issue. And I tell people, like, when you see a company in distress, you need to know why the company is in distress, because that's going to tell you, or I should say, like, the company price, the stock price. If you see this big drop, you're like, your first question is, why did this happen? And then once you figure out why it happened, then you can figure out if you want to make a play on it. And I think that's where people were like missing the kind of the thought process, or missing the logic, because they were kind of like, yeah, the stock price went down, buy low so high, and it's like, no, why did it go down? Is it something that's short term, or is it something a long term issue, like the manifestation of a longer term issue? And in the case of Hertz, yes, it was the manifestation of a longer term issue. They were over leveraged. They were severely over leveraged. So that was an issue. Like, but on the other side, I think this is I don't know if you remember, this was like 2016, the Department of Justice under President Obama said, we're no longer using private prisons. And it was like during the summer, and like everybody's like, oh my gosh, they're not using private prisons anymore. And their stock dropped 65% in one day, like all of the private prisons. And interesting enough, a lot of the private prisons are REITs. It's just very bizarre. Whole
That is
bizarre.
interesting.
Bizarre. So you're kind of like, okay. And so but the thing is, at the time, like and I think we were talking about this, our experience. So I actually worked for the government in some way, shape, or form for the majority of my legal career. And I know that when a government agency takes a position, there's two government agencies involved in the issue. The other one they'll do a joint statement, or they'll do one right after each other. I also knew that Immigrations and Customs Enforcement, or ICE, actually was the primary user of private prisons. So I was like, okay, DOJ came out with their statement, and I'm looking for ICE. I was like, this is curious. ICE has said nothing. And I said, me knowing government, ICE is not changing their position at all. And so maybe about a week and a half later, and it may not even been that long, ICE comes out like with this whisper, like, we're not doing anything. And I was kind of like, huh. So you're not doing anything. So I said, that's an artificial drop. I said, that's a drop that's just, and I'm not like down with private prisons. I'm like, no, this is pretty crappy. And I told my mom about it. I said, listen, mommy. And I managed my mom's retirement. And I said, mommy, I want to take advantage of this position. I don't believe in it. I know you don't either. But do you mind if we just kind of take these profits and go? And she said, I don't care. She said, I don't want to be in this longer. She's like, it's not an investment for me because I don't believe in it. But she said, I understand kind of your thought process with it, but I want to get in and out as quickly as possible. And I said, okay, I got it. So we got in maybe either September or October, we got in. And in the day that Donald Trump got elected, it doubled in one day. And then we ended up getting out in February. I think February of 2017, I think. Because she was like, and I just didn't see the point anymore. I mean, one, I wasn't like jumping up and down, but I saw the opportunity, and I knew that it wasn't a call opportunity because I didn't know how long it was going to take for the market to kind of realize that, hey, what we thought was going on wasn't. And that's kind of what I want investors to do. Like if you know an industry and you understand it, you're going to be able to exploit opportunities in a way that other people aren't. Like when you're in aerospace, you're like, if someone said, yeah, we have this jet fuel that's going to do X, Y, and Z, and everybody's excited about it. You're just like, you as somebody in that industry, going like, no, some of those claims aren't as true as you want them to be. At the most, they may be speculative, but based on what you know of that particular industry, you're like, that's not going to work, or that can't be true. And I think that happens a lot. So everybody else gets really excited and you're just like, and they're like, well, why is it's kind of like everybody's excited about the party and you're just kind of sitting back in the background. I don't know if you've ever seen The Simpsons. There was an episode of The Simpsons like years ago, and I don't know why this one stands out to me, but there was like a big like brawl on their the lawn, but there was this guy who was like dressed in white, and they were like, well, what's that guy going to do? Why isn't he fighting? Do you remember that?
I kind of remember that, yes.
And and then like they turn their head and he like just completely like goes like bonkers, but no one
Yeah.
sees it. But that's kind of the way I feel. Like I'm like, no, something's wrong, and I'm just going to stand here. And I feel like I always look at my experts in that field. I'm like, what are the people in the field saying? Okay, all right, then I'm not getting in. Or I feel like, what, I'm not an expert enough in this particular industry. I'm going to have to just stand down. So I kind of felt that way. I didn't feel that way with the private prison thing because I was like, bop, bop, bop. I was like, no. They didn't get, the market didn't get this right. And I think that's kind of why I tell people you have to invest in what you understand, because that's where you're going to see those opportunities. That's when you're going to get like what we call the 10 bagger, when you're going 10 times, your investment. That's how you get them, because you're like, I caught you.
Absolutely. It's funny. If you look at Warren Buffett and what he does,
Mm-hmm.
he's not really going out there finding some secret sauce unless he's doing something nefarious. All he's doing is he's just reading reports all day. It's actually quite boring. I've told people that say, "Oh, I wish I could be the next Warren Buffett." I'm like, man, I think Warren Buffett's life is pretty boring. I think you probably just want to do your own thing, do what you can with investing. But if you want to read for 14 hours a day stock reports, then you can be like Warren Buffett.
And there's some really, and now granted, I do read stock reports.
I do too. Oh, I do too.
And I know, and I think we get it. And I mean, I think a lot of people are just like, oh, well, how did he know that? I was like, you're required. The SEC requires that you put this stuff out. Like the
Yeah.
SEC is like, hey, we have the 10K, we have the 10K, which is the annual report. We have the 10Q, which is the annual report, and then we have the 8K, which is like the current report. Like, and basically with the 8K, they're saying anything that could be important for an investor, we have to show it to people, or we have to let people know. So there's a lot of things like, how did you know them? Like, because it was talked about on the SEC website. You just got to look for it. It's there. It's there. It's there for you to read. And again, sometimes it takes a little bit more thought. Like, okay, I'm given this information, but what's the logical kind of expansion of this idea? What does this really mean? So if you have a really good, so you'll find out in an 8K that a CEO is leaving. And you're like, okay, well, what does this mean for the company? Is this a CEO that we're just like, hey, this company, rises and falls on the CEO? Or is it like, meh. And so you have to kind of think about it like, okay, I had this bit of information. What does this really mean? And that's when you're like understanding the industry and understanding the company that allows you to kind of think to yourself like, okay, I think that based on these things, X, Y, Z.
So my last question, we focus on trying to get new investors and beginning investors into investing. Times like this, where it looks like the market is just, who knows what's going on.
Mm-hmm.
What would you suggest to a new investor if it was like some 21-year-old that just got out of college and is going to do their first investment without an investment advisor? What would you suggest they research or read or do?
So I would really suggest that they save their money. I mean, cash is king. When you are ready to make these plays and you see like you will get the opportunity to buy low and sell high. And in this case, you will have the opportunity to buy low. And what do you want to do when you have that opportunity to buy low? Buy as much as you can. So you want to be able to be prepared to execute. So you need to put some cash aside. So that's the first thing. In terms of doing, I absolutely love The Intelligent Investor is a really good book. First of all, it's a snooze fest. And it's long as all get out. It's like this thick. It's like 600 pages. Who's reading that? But Peter Lynch, His book, One Up on Wall Street, I think is a really good book for the average investor because it kind of talks about the things we've talked about, like just understanding the industry, catching these opportunities. And just as a background for people, Peter Lynch was the head of the Fidelity's Magellan Fund, which I believe, if I get the stats correctly, is the most successful mutual fund in history.
Yeah.
So like you kind of want to learn from him, you know, and everybody gets excited about Warren Buffett, but I'm like, for you to be a mutual fund with that type of track record over that period of time, you know, you you have to get it. And I would take, you know, some real good tips from my friend Peter. I'm going to call him my friend. So that's the first thing. So, you know, definitely save your money, get in position, read, and then also kind of create a watch list. Because there's certain companies, like I said, that I know, like, and trust, or that I kind of start, that's my baseline. And when I say trust, I mean, I trust their product in the marketplace. Now, that doesn't mean that I invest in them, because I have to do a little bit more digging, you know, but that's kind of where I start. Because if I understand, like, you know, how this company makes money, then the next thing I can do is say, okay, I understand how this company makes money. I see that they do it. Now, are they successful in what they're trying to do? Like, I really liked Sears. Sears is one of my favorite companies. I just really like Sears. Now, as we all know, poor Sears. I mean, so like I say,
I was rooting for them.
You know, like, go Sears, you know, try, do something. But again, it's that, you know, I liked Sears. I thought they had great products. However, you know, they had some real structural issues that made me not be able to invest in them. And this is before they went bankrupt. So I was like, ooh. So a couple of things that I noticed about Sears is that they had a pension problem. So a lot of the older companies like Macy's, that's pretty much one of Macy's really big problems, is that these older companies, which I call legacy companies, they have these pension obligations, and pension obligations require you to make these payments to people who, by the actuaries' numbers, they thought that they would be, not to be morbid, but those people probably would have been dead by now.
Yeah.
And they're still getting pension payments. So again, that's still an obligation of the company, who has since basically phased out the pension for younger workers. But they still have this old obligation from, like, a friend of mine says, like, way back at the old house. Like, they still have this old obligation that they have to fulfill. So it's really dragging their company down. And when you have debt, even as a person, and I think we look at companies as like these mythical, magical things. But if you look at a company like you would look at a person, you can kind of like put those things in perspective. So I can't just if I have a lot of debt as a person, I can't just do whatever I want. Like, I can't just pick up my stuff and move to Bora Bora because I have obligations here. Yeah. But on the other side, you know, if I don't have a lot of debt, you know, I have the ability to be very nimble. And so those are the companies that I personally look for when I'm starting to look at, like, does this company have a lot of debt? You know, does this company have the ability to be nimble? So I'm like, save your money, do your research, kind of start your watch list, but then start evaluating the companies. And then I don't know, I think I'm obsessed with The Simpsons, because everything I think about is with The Simpsons. But I also want to know who's running the company, because that's how I kind of evaluate a company. Like, as much as, like, I don't know if you remember, I think his name was Otto, the bus driver.
I know Otto. Yep.
Like, yeah, like, I don't want Otto, the bus driver, driving my company. But, you know, in some cases, like, and I did, like, for example, Uber was one of them. I mean, before I think Dara, there was Travis, and Travis was kind of like the Uber bus driver. Mm-hmm. So, you know, he managed to get Uber sued on 6 of the 7 continents of the world. That's, yeah. You know, so no matter how good the company is and what good, and I think they also had some kind of logistical, you know, cost issues with kind of their cost structure. But if your company's getting sued on 6 of the 7 continents of the world, you know, you're going to have some real problems. So understanding all of those things and how they interplay. So getting your money together, start researching, like going to the company and understanding, understanding this is a marathon. It's not a sprint. You're not going to pick up all of these random tidbits all the time. But if you're a consistent sponge, at some point, it's kind of like when you're learning a language or like even riding a bike. Like, at some point, you're not going to need the training wheels. At some point, you're going to be like, I'm riding this bike. I get it. I'm watching CNBC and I'm like, I completely understand what they just said just now. But it takes time. So just becoming a student of the market is so important. Like, if you become that student, it's just not, again, you're not going to you're not going to get it immediately. And there's some stuff that you're like, oh, that makes sense. And then other stuff you're like, I didn't quite get that. But so I think all of those things together will make you a good investor. So even like a year from now, you're like, hey, I was able to really change the way I look at money, change the way that my finances look. And also I'm now kind of an investor, and I'm not an investor by accident. I'm an investor by design.
Awesome. Courtney, thank you so much for doing this again. Courtney Richardson, she runs the Ivy Investor. You can see her website, ivyinvestor.com.
Yep.
And you can follow her on Twitter and Facebook and Pinterest and Instagram.
Yeah, YouTube. I have a YouTube channel. I don't have that many subscribers. I'm working on it, but yeah.
Awesome.